I want to get Jobs Day out of the way. What will you look at 8:30 tomorrow morning?
Well, I think probably the most important thing is after being stuck at 4.1 for all the way back to October, it looks like the unemployment rate might fall to 4%. So
we'll breach through 4?
I think we'll hit 4 this time. We'll be going through 4 as the year progresses, for sure.
You are expert at parsing economic growth. You were brilliantly cautious when others were optimistic, and there's other times you flip. Can you go with Trump, make America great again, 3%, sustain GDP?
I think we can get 3% maybe for the next year or two. I'm not sure we're going to be able to sustain that in the long term. Maybe we can get a little bit higher than what we've seen so far in this recovery, but I think 3% going forward is going to be tough to sustain as long as productivity growth is as low as it's been.
Stephen, is the Fed, right in looking at inflation the way they did yesterday? If you look at FOMC, they're kind of, they're pretty cool about where inflation's headed. Is this the right way, the right attitude?
Well, yeah, I think we've been below 2% on their inflation target for a number of years. So if we go to 2.1, they're not going to panic. I think the key is, as it gets above 2%, is where do they think the trend is headed? If it's 2.1, 2.2, and they think it's going to stabilize there, that's fine. If it's 2.2, 2.3 on the way to 2.5, on the way possibly to 3, that becomes a problem.
Right. Where do you see treasuries moving on the back of this? So we see, for once, the flattening yield curve not flattening anymore. Is this the start of something new?
Well, I think there are a couple of things that are going to be key for the Treasury market and the yield curve going forward. One is the markets are pricing the Fed just about in line with the dots for 2018, but they don't have much priced in beyond that. So if people start to become more convinced that the Fed is going to keep going into next year, and the other thing is inflation. I think the market has a pretty benign view of inflation, looking for inflation to kind of hit that 2% mark and stick right there. If it does indeed accelerate above 2% and starts to give the Fed something to worry about, then that's something the market's going to have to take into consideration as well.